Morning, morning, morning. Welcome to the party. Welcome to the Texas Real Estate Show. Here we are on this nice, bright and breezy Thursday morning. It's around noon o'clock. Houston, USA Central Time. And we're here to talk about all things bright and breezy real estate. Whether you're an investor, whether you're a wannabe investor and you're looking to get into the business, we really want you to, we want to be your real estate information resource. It doesn't make any difference, to be perfectly honest, even if you're outside of Texas. Please join the chat. If you have any questions, please feel free to put the chat in the submission. You're more than welcome. We'll answer any questions that we possibly can. Please use us as a resource. And this morning we have the two lone ladies here. We have Miss Laura and we have Miss Courtney from Lone Star Premier Mortgage, correct?
Correct.
And how are we feeling this morning, Laura? Are we going red as always, or
yes,
I like to pick on you.
Red again today.
Oh no, she put makeup on so you can't see it today.
Yeah, and apparently Laura was the #1 loan agent for her company last month. So Laura, congratulations, Laura.
Thank
We
you.
appreciate you doing them loans for us. And anyway, so here we are. What we're going to talk about this morning is we've seen a lot of things on social media, Yahoo Finance, MSNBC, and different news outlets that home buyers take advantage of lower rates as they feel that the latest mortgage news is that mortgage rates are going to drop again amid economic uncertainty. And I mentioned this to Miss Laura yesterday, and Laura said, hold on, before you go any further, you need to hear this. So Laura, tell us your side of the scoop on that.
Well, honestly speaking, I think that because, we're heading into the peak of the season, this is why we're seeing more mortgage applications, and honestly, we have seen that the interest rate is kind of stabilized, which is nice to see. That way we can get more home buyers out there, and even those that have been in the fence. And like everybody in the world, in the US, we are praying for those interest rates to drop down, because that will help us, help more buyers and, help the industry, all the professionals in this industry.
So I know we have a long way to go as far as inflation goes, but it looks like we're kind of seeing the light at the end of the tunnel.
Right.
So hopefully we will see some rates drop a little bit. Now, will we have 2 or 3s like COVID? Nope, don't think so.
And we probably won't hope for that, because we don't want another pandemic, so not me.
But so you see, basically in the residential market, you feel we're sort of stabilizing out. Is that where you see it?
Yeah, that's what I feel.
And now we all know that we spoke about it earlier on, that we're coming into the summer months. So what effect do you think that will have on interest? On interest rates? Do you think that will affect the market, as in interest rates, or do you think it'll just affect?
It just depends on
the
inflation,
inventory.
and it depends on the jobs, so
And if the feds want to keep raising the rates.
and those feds out there, like, we're at their mercy, right? So hopefully, we're really hoping that they stay stabilized but not hike up.
Yeah, well, our offices, we've seen an increase in sales that we've been doing recently, and we've seen an increase in offers. And we spoke with this earlier on before the show to sort of debrief. And you said you've seen an increase in mortgage applications as well,
Right.
over the last 4 weeks.
Correct.
Yeah, so during the last 4 weeks, the interest rates have went down some. Has it made a huge difference? No, but it's given us a little light at the end of the tunnel, saying, hey, this might be a trend where it might continue to go down.
Yeah.
So it is bringing those buyers that have been sitting on the sidelines, kind of waiting to see what happens. They are actively searching.
And I've
again.
always argued, I really think it's a band-aid, to be perfectly honest, because even if the mortgage rates come down, it doesn't solve the problem. There's not enough houses out there for the people that are really looking for houses at the moment.
Right.
And I really think it's a band-aid problem.
Yeah.
I just think you're just putting a band-aid on, a real problem. Now, do you reduce the mortgage rates? Help? Yes, of course it does. but you've still got yourself a problem because there's simply not enough houses out there. That's the first thing, and I don't think there's enough houses, affordable housing out there as well.
Yeah, and then
That is very true.
now, since we did have those 2s and 3%, we're probably going to see more people sit on what they have instead of moving and, you know, getting 5s and 6s.
Right.
So
And what I have seen is people are asking more questions, even refis, like people that are in the 8s, they're not waiting anymore to refinance, you know, their properties because they're like, okay, so how long is this going to last? Like, I at least want to take advantage of somewhat of a better interest rate. So if the market keeps stabilizing, then we might see a little bit more refis come in of those people that had higher interest rates.
Right, absolutely.
And even in the non-QM world, we have seen that the interest rates have, you know, gone down a bit. So that's actually benefits investors and all the other loan products that we have out there.
yeah, those non-QMs have came down, and they're not too far off from.
Now hold on, before
conforming.
you go any further, for the people on the podcast, QM.
QM.
What is a QM?
A QM, it's a qualified mortgage, which means that we're going to look, or your loan officer will look at your debt to income, your employment, and your housing history. So 2 years pretty much down the line. And if you have that, then you qualify for a conventional loan, FHA loan, VA loan, and USDA loan. And depending on your debt to income, then that's probably the program where you're going to fall. If you're one of those buyers that do not pay their taxes or enough on their taxes because of certain personal reasons, you know, or an investor that is looking to purchase a property or additional property without getting too much documentation, or probably a foreign national out there looking to buy property here in the U.S., you know, there's loan products that even those do not qualify for a qualified mortgage, but we have those loan products, and even those loan products, we have seen those interest rates get reduced to quite a bit that benefits them in the long run.
Okay, all right. I just think it's just so we're keeping it on the level for the viewers. I think that would be important. The other thing I just want to touch base on is, could you just explain to the viewers on the podcast, because this is a term that even a lot of agents don't fully understand, explain what a warrantable mortgage is.
I'll let you go ahead and take that one, Laura.
Oh. A warrantable mortgage. Okay.
As far as we're talking about condos,
Anyhow, any warrantable loan.
Okay, so let's touch base, because we get this question a lot when it comes down to condos.
And I bet many money's from real estate
townhouses.
agents.
Yes, it's from real estate agents.
They don't understand, they're never trained on what is
And
a warrantable loan.
That most of the time, so just in case anybody out there, those real estate agents that do not know this information, there's actually FHA has a website that is accessible by everybody. And if your condo is listed in that particular list, that FHA list, then your buyer can take advantage of an FHA condo. So if it's not listed, then you fall under probably the conventional program. And what that means is that if, I believe it's 50% cannot be owned by investors.
Right.
So it's like a very fine line.
But if you want me to help you with it, I can.
And then also, they cannot have lawsuits. The HOA cannot have
within the last
certain types
3 years
of
normally.
lawsuits. Yeah. So let's say if it's a lawsuit that the lender considers they can brush it under the rug, then, you know, might pass. But for the most part, condos are very, very a very special breed that you have to handle with care.
We do HOA management, and we do get asked this question by real estate agents all the time. And I'm sorry, but I blame the brokers, because the brokers need to know what a warrantable loan is. But a warrantable loan is something where normally you've got to put a down payment. Is it 20%? Normally, the
warrantable or non-warrantable?
warrantable. If it's a non-warrantable loan, you've got to put more money down. Correct?
Yes.
So non-warrantable is going to start out at 15%.
Okay.
Being owner occupied, and then warrantable is
And
going to be
then
normal.
and then you've got to have more than 50% that are owner occupants.
Yes.
And then you've got to have a 10% reserve in your financials as well. Them are the big points.
Yeah, and then also things like the investors having ownership in them, as well as they can't be. Some of those are like condotels and stuff like that. Timeshares, none of those are warrantable. So
So no Airbnbs.
Yeah.
Yeah. And one of the other things that is also very common with condos, especially in Houston, there's a very, very small percentage of condos in Houston that are FHA approved.
I think there's like 4 or 5.
Yeah. So just to put it into perspective,
there's not.
So the chances of you buying an FHA the chances of you buying a condo with an FHA loan is very, very small.
Yeah.
Yeah, we're in the we do HOA business, and it's very, very frustrating for buyers because they come with an FHA, and it's very, very difficult. So, and it's also very difficult for investors because you've got HOA fees, which is taken out of the cash flow. So I thought that was actually a good point to cover.
Yeah, and if anybody wants that link, feel free to reach out to us, and we'll more than likely provide and help each other.
Yeah.
A few other risks that make them non-warrantable as well is if one single person owns more than 10% of the units. Also, if more than 25% of the space within that community is commercially used. And then also if a high percentage of the condo users are delinquent on their association dues, then those are things that can make them non-warrantable.
Right. All right. I'm going to throw something in there actually, which was pretty interesting. Can you go to Discord? And it's in, I believe, Courtney put it in about the multifamily apartment owner that was foreclosed on 3,200 units in Houston. Do you see that? Mm-hmm. If you can bring that up. Just to everybody know, everybody says there's going to be, a crash and everything's going to come tumbling down. What I want to point out to people is the multifamily apartment market is completely different to the single family home market. And don't be misled when you read things like this. A multifamily apartment owner foreclosed on 3,200 units. This is just apparently this is a 4 unit. This is 4 units, I believe. But there was a total of 3,200 units. But basically, this is a completely different market. It's a completely different way of managing properties. The laws of multifamily apartments are completely different to what it would be to a regular residential housing, as in, tenants have got their rights, just as landlords have got their rights. And I'll be honest with you, often in condos, sometimes HOAs don't fully understand that tenants and owners have rights as well. But at the same time, multifamily apartment owners normally have their own contracts. So sometimes it's a little bit more restraint if you want to.
All I know is they can evict people quick in those apartments.
They can do because what happens is it's the same as if you go buy a new house. Whose contract do you use to buy a new house? The buyer's not protected, and it's the same with multifamily apartment complexes. You go live in an apartment, all right, they will do you a discount to get you into the apartment, and then you'll find in 12, like, there was one I drove by the other day, first 3 months free. Mm-hmm. So you really think they're going to let you stay there free for 3 months? Do you not think they're going to take you back over a time? And when they've got you in, they've got you in. But when you see things like this, people think, oh, I'm waiting for the crush, I'm waiting for the foreclosures to run through. I had somebody talk to me the other day and said, but I see the article that we're talking about. They said, oh, well, I've seen the article that, the foreclosures are going to start. The foreclosures aren't going to start. The multi-family. What would you rather do? Live in an apartment? All right, where an apartment might be some apartments now are just ridiculous. You're talking $1,500, $2,000, or would you rather live in a house that maybe is even a 2-bedroom, 1-bath, or a little townhouse?
Yeah, and what happened is, residential lending and commercial lending are two very different beasts. And so
good point.
This investment group, Apple's Way, they borrowed $229 million to scoop up these properties. And that was in the middle of COVID. But what they did is when they went with the lending company, they had a floating
line of credit.
They had a floating interest rate.
Right.
So rent was great when we were in the 3s and stuff, but now that it's went up, those properties ain't making money.
Right.
So after they got foreclosed on, they've actually already gotten sold at auction, and they were sold for almost $30 million less than what they were bought for literally a year and a half ago.
Yeah. So, and an investment strategy is for a lot of people when they buy houses, after a time when they bought the house and they've got a bit of equity in the house, then they contact the loan girls and they do an equity pull out. They take their equity and then they go buy their next house, and that way they're building their portfolio of homes or investments or whatever it is. So if you want to do that and you need to know more, contact the loan girls. And the last thing we've got, we're keeping the meeting pretty short today, we're going to talk about US jobless claims rise but remain historically low. So what's your scoop on that, ladies, with the economy and
I don't know.
you have no feeling?
We keep talking about jobs. It's kind of like
Well, I think it's important because you get in economics. What do we call it? We call the generation of cash flow, the way that money flows throughout the system and the way that money rotates. I personally think that is so important regardless in a capitalist society. To me, it is so important that you keep that money rotating within the system, because if not, nothing happens. The people that really suffer with that at the end of the day is the people on the street, and at the end of the day what happens is, business suffer, people get laid off. With AI coming in, I think that's a problem as well. I think that, they're talking now about there's 2 types of AI. There's like an individual AI, which does a specific task where somebody will work and the robot will help them with that particular task, and the other one is a general AI. So that does everything, just like making cars and such like.
We've seen more of that in our industry too, as far as AI. There's some tools that we can use that we can actually ask the AI questions about mortgages. Does it work? Most of the time. Does it have flaws? Yes, it does.
Same thing with me as well, because photography and things like that. There are systems where, like, if I go photograph a wedding or photograph any of you two, and AI, there's a system now where I can just put in the pictures and the AI will choose the best photos that it thinks, and then it'll copy the way that I edit them. So I literally just upload it and I did not touch it, but I don't like that.
Okay.
No.
Well, let me tell you something. Completely off the real estate, the real estate show now, the Texas real estate show. Completely off the Texas real estate show. Really, have you heard about the latest scam?
No. What?
You've got AI technology copying children's voices, calling them up, speaking to their father or mother or grandparents, and saying that they're in jail and they need money.
Oh, that's crazy.
I've seen that happen before, especially like with
And
Facebook.
AI is generating people's voices.
That's crazy.
They're doing it with singers too. Like, people are taking, like, say Courtney decides she wants to be a singer now, and she can take.
She wants to be Beyonce.
Yeah, well, she can take Beyonce's voice and say that she featured Beyonce on a song now and things like that.
It's sad, but every time I look at something on the internet, I'm all like, is that really real?
Yeah.
Is it real? Because they can make stuff so real now, and it is so
It's
not.
scary. But yeah, there's a thing called ChatGPT going back to everything, and that's what a lot of companies are going towards instead of having people, you know, like if you have a customer service complaint or something, it's a robot now that handles it,
Yeah.
and so they don't even.
But that gets me so frustrated when I call up customer service. Press 1 for this, press 2 for this, press 3 for that, press 4 for
Oh,
that, and he
yeah.
puts you in a circle.
And it's like,
he puts
oh.
you in a loop.
You can take care of this yourself. Go online. You got it.
But then when you go online, you're still talking to a robot, and it's just like, what is going on? I'm happy that we are in Houston. So being in Texas, people still like the actual, you know, human to human connection. But in the northern states, I can't imagine what it's like up there with, you know, like in New York or like, I don't know, Jersey or something like that, where people, you know, they don't like talking to each other up there. So I can't imagine how, you know, the people in their job markets are doing with those types of jobs and things like that. So.
Yeah, and then for the people that have watched us to the end of the show today, Laura, you was going to mention something about a new product that's come out. When did it come out? A new loan
last
product?
night. Last night. So we have one of our great lenders that they just rolled out a new program. They rolled out this program a couple years ago, and right before COVID, right? But this year they just rolled it out, and it's 1% for conventional. Of course, you know, you have to qualify. There's certain parameters that, you know, you have to cover, but for the most part, you know, it's a 1% down payment and 2% from the lender up to $4,000. So, and it's based on qualifying you, of course, you know, with your income and debt ratios and all that good stuff and your credit score. So this is one of the greatest programs that has rolled out, and we hope that this can help the market out there and those people that have been on the fence trying to purchase a home, improving their credit and all that good stuff. So hopefully we can hear from them, you know, here pretty soon and get them into this great program.
Okay, so what I want to sort of add to that, so everybody fully understands, is if you're buying a home, you can say you want to buy a home for 200. This is why you need a good real estate agent that can help you with this and explain it to you, and a great loan officer like the two girls. Basically, you've got a house for $300,000. Basically, you can buy a house with 1% down. That's a 3% down payment. Then, on top of that, if you've got an agent that knows how to negotiate on your behalf, you can ask up to 3% in closing costs. Is that correct?
On a conventional.
Yes,
if it's
that
a
is
conventional
correct.
loan. So the idea is, for your closing costs, you can ask up to $9,000. So basically what's going to happen is the seller, although it's for a $300,000 property, the seller can actually, you look at the net really, not the gross cost of the property, because you need to come to the table with so much money. The down payment is one thing, but your closing costs are something completely different. So you can ask up to $9,000 if it's negotiated properly towards your closing costs. And that closing costs will basically, there are fees that will go to your lender, that will go to the title company, that can be put to home warranty. There's so many different things that it can go to, and if you don't use it, you lose it. So basically, in that case, you can always put all that stuff on top, find out what it is, and then maybe a week before closing, you can go back to the seller and say, well, we're not using the cost, you know, of the home, so you get yourself a reduction as well. And that's why I say to everybody, get yourself a good real estate agent.
And also don't forget that on an FHA loan, you can ask for up to 6% in concessions.
I mean, isn't that wonderful? Come on, boys and
if
girls.
your realtor, you know, and your loan officer work together as a team, that can be very achievable.
I know that now this is not everybody's situation, but you're working on a file now that you're able to get good seller concessions, and you're able to lock them in at 4.5.
Yes, 4.5.
Wow.
So they actually got the seller to, and this was a builder, to pay for their, which is unorthodox, but they got the builder to pay for their title, for their survey, and they got their concessions on their FHA, and they were able to buy down their rate to a 4.5. So
Right.
And this is a fixed rate for the 30 years. This is
30
not
years.
a buy down rate that only stays 1 or 2 years.
And
so
just to let everybody know, and this is just my professional opinion, sometimes I think it's a ploy by some new home builders to use their lender, to use their title company. They cannot force you to use their title company and their loan officer, you know.
they can't, but they can take away your seller concessions.
But
if
they
you
can
don't.
take away your seller concessions. And my attitude to you is, I'm going to fall back again. Get yourself a good real estate agent, because you'd be surprised if you've got a good real estate agent that knows how to dig their heels in, that knows how to drive a hard bargain. You'll get your seller concessions.
right.
If they really want to sell that house, they will get their seller concessions.
And just think about it also, like a lot of these builders have a lot of some have a lot of inventory depending where you're at, right? Or things that have fallen through because of the interest rates going up. So if you have a good real estate in your corner and you have a good loan officer, then you can always, achieve, your dream house with both parties together. And then another thing is that it takes a team to get it worked on. So make sure you always interview your realtor and your loan officer, make sure that they're doing the best. And also stay aware that a builder will always give you a loan estimate based on $59 on a home insurance, which that's really impossible in the Houston area, right? And probably tax rate at a 1%. So that's the way that they get these buyers on the door and make them commit to signing in with them. I've seen that a lot lately.
It's a bait and switch. It's a
bait and switch.
Look what I can do for you, and then oops.
And then they forget to read the fine print that they can charge them crazy amount of origination fees, but they won't show it up front, and these buyers that do not have a good agent, they're like, okay, well, I'll just give in, but always remember that the builder is not there to help you, because they're always going to make money regardless of how much they portray they're giving you.
Gotcha. Okay, well, there's some good information there, I think.
Yeah, that was going to be my question for the common folk.
What was that?
She answered it already. Just like, how can she said that it would be $59 and then like a 1% interest rate. But I was going to ask how that could change.
That can change drastically, and then that's why you see, like, we get from time to time a lot of contracts that are in builders that, like, a week before closing or 2 weeks before closing, like, they're all falling apart because the lender at the builder side did not estimate the correct taxes, so they'll put like a 1.2, and actually it's a 2.77,
right?
Or a 3.2.
Let's sort of talk that as a talking point.
Mm-hmm.
All right. A lot of new home buyers that buy new homes don't understand that when you buy the home, the taxes is basically land. It's taxed on the land, but as soon as you put a $300,000 structure on it, that changes the whole tax figure. Right. So then when you come round to January the 1st you come to, and your local tax authority are coming in and saying, well, your taxes, it's no land no more, but now we're going to tax you on a $300,000 structure, plus your mud taxes, all right, municipal utility districts, plus any PID, which is a property improvement district, if they are applicable in that area. There's a school districts. I mean, there's all sorts of things that are applicable. All of a sudden, you've got a property that may be difficult for you to afford, and you need to go refinance it just to hold on to it.
Yeah. Or they have that payment shocker, like, wait a minute, you said my payment was going to be $2,312, and now you're telling me that it's $3,500. What happened? But that's because the lender at the builder side just put in the bait just to get them in the door. And then at the end of the day, they're not looking for the best interest.
I
because
don't-
they get a lot of people that come in the door, right? So they don't.
There's
have
some
to-
good builders out there, but I think there's some builders that don't tell the full story.
Yeah, and just to kind of explain it to the homeowners, if anybody's listening, but when you go to close on your house, if you're in what's called escrow, which is basically where you have a savings account where your taxes get paid out of, your insurance gets paid out of, and sometimes your mortgage insurance as well will get paid out of. When we go to close on that property, we take 12 months of homeowners insurance up front, plus you put 3 months of homeowners insurance and 3 months of taxes basically into that savings account. That way, when the payments come up, you have that money in there and it just comes out of that account and gets paid directly from there instead of you having a $4,000 or $5,000 bill 1 month out of the year. With that being said, when these builders, underestimate how much it is, it's going to drastically change your closing costs, where you think you're only bringing, $10,000 to closing, and then all of a sudden it's up to $15,000, $16,000 because of their mistake and not doing their due diligence into how much it actually is.
Yeah.
And to tag along to what you said, yes, the land is $57,000, right before they build, but once they put a price tag on it of the, they add the home, it goes up to maybe $6,000, $8,000, $10,000, depending on the value of that property.
Yeah, I look on some builders as like a professional gambler. They know how to, they know how to push them gambling chips from a point of view of appraising. They know how to make sure that them properties are appraised properly, how to push up the appraisals.
They're building the houses. They should know.
Yeah, but I think there's a limit, which is where they should be truthful to people, because I don't want to see anybody lose their house. And I think there's people now that they reckon have bought new houses, when they was at the peak. Some stories you hear that there's 20% of people that bought new houses are underwater on their mortgages.
Yeah. And it's sad to see that sometimes they come to us in that situation, because I had a family that moved within Texas, from Lubbock to Houston, and their builder had approved them in, sorry, not to Houston, but to Austin. And their builder had approved them and everything. And, 2 weeks before closing, they couldn't get a loan. And there was, of course, I had the loan product, but, it's sad because they actually started moving their stuff. Everything was in a U-Haul truck. And they were living out of a U-Haul truck, and they had to rent a hotel, and they moved to an Airbnb because, they didn't know if they were going to close, and because of what the builder did to them. So it's kind of, there's
That's what I'm saying. It's sad. I think it's a sad situation. People need to be prepared.
That's why you have to, buying a house is one of the biggest buys of anybody's life for the most part. That's the biggest purchase price that you're going to be buying. And it's one of the biggest things too, especially when you're scheduling to move, and lights, electricity, water needs to be turned on, everything else. You gotta have people on your side fighting for you and helping you along the way, because it's very easy when you're a first-time home buyer or not, just going from renting to buying, to navigate through all that stuff.
Yeah, and I think in any real estate purchase, I think that one of the other biggest mistakes that people make is the seller or the new home builder is not your friend.
No.
Right.
At the end of the day, they want to get as much as they can out of that property. So the seller or the new home builder is not your friend. So you need somebody in between that you can basically, if you are successfully going to buy a house or a home, you need a strategy to buy that home, and that's what the realtor and the loan officer should put together.
And to add on that point, and please correct me if I'm wrong, new builders, their sales representatives don't even have to have a real estate license.
They don't like them to have a real estate license because they don't have to tell you the truth.
So they're not held by those fiduciary duties
No.
as a real estate agent is.
No, they're not. They're not. As a licensed real estate agent, I mean, don't get me wrong. If a builder says anything that's not true, then obviously it's got to be proved in a court of law. So that's an open-ended statement.
It has to be proved that they did that with the intent
Right.
of deceit.
Right, but the truth of the matter is, if you're licensed, then as a licensed real estate agent and as a licensed real estate broker, we have to go through a set structure, which is an advantage to a buyer buying a property. In other words, we have a fiduciary responsibility to the buyer to make sure that they're taken care of when they buy the property. If it's an employee, their fiduciary responsibility is to the seller, who's the new home builder.
That's correct.
That's really what it boils down to. Anyway, we'll call it quits there, I think. You okay with that, Laura?
Yeah,
That's
definitely.
long enough before you go red anymore?
Before I start coughing, I'm just recovering.
Yeah,
from
Laura
my voice.
Laura hasn't been well, just so everybody knows. She hasn't
but she
been
looks
well.
well.
She does look well, and it's nice to have her back in the office, and she's nice to have a bit of fun with as well. Yeah, but anyway, so from the Lone Ladies with Laura and Miss Courtney from Lone Star Premium Mortgage, we'd sort of like to thank you for everything you've done, and and from myself, Stephen Williams. If you want to contact us, you can contact us through LinkedIn. They can contact you through LinkedIn. Can they contact?
Yeah, we're on
What
LinkedIn,
social
yeah.
media do you prefer?
Anyone. We are very flexible on social media. You can contact us on Instagram, Facebook, LinkedIn,
Okay.
YouTube,
Okay.
Twitter. Anybody?
I'm not the Twitter
TikTok.
Find me
So,
on Google and
Oh,
pick the
she's-
phone
you'll
up and
find
call
us.
me.
You'll find us there somewhere.
She's definitely
Yeah.
a TikTok queen, I'll tell you that much.
Yeah, well,
Not quite.
Yes, you are.
if you have any questions for me, or you're looking to get into the business, new agents, you're looking for agents. If we're also looking for agents that want to take their business to the next level, we'd love to hear from you. So just find us on Google, Century 21 Olympian. We look forward to hear from you. Until next week, we will say bye from the Texas Real Estate Show. Have a good week and peace.
Bye.